Galane Gold is an unhedged gold producer and explorer with mining operations and exploration tenements in Botswana and South Africa. Galane Gold's management team is comprised of senior mining professionals with extensive experience in managing mining, processing operations, and large-scale exploration programs. Galane Gold is committed to operating at world-class standards and is focused on the safety of its employees, respecting their environment, and contributing to the communities in which it operates. Galane Gold trades on the TSX Venture under the ticker GG.
Ravi Sood joins me now. Ravi, welcome back.
Pleasure to be here, James.
Ravi, the big news of the day, gold at this moment is trading at 1505 USD. Clearly, it's on a bit of a tear, up almost 16% in the last month, highest level in 7 years. What are the fundamentals globally driving the price of gold currently?
Well, I don't think the fundamentals have changed much, the drivers for gold. What's changed is the narrative that is behind those fundamentals has started to catch a bit of a tailwind, and people have started to accept it in the mainstream. And so going back to what are those fundamentals? One, you've got central banks printing money relentlessly. That hasn't changed. That's been true for a long time. You've got zero or near zero rates, and now probably the single biggest catalyst is the fact that we've gone from this rate hike cycle to a rate cut cycle, and we're looking at now probably easing, other forms of quantitative easing being put back in place. And so that narrative is, all those fundamentals have been true for many years, but that narrative is now catching wind with the mainstream, and that's now being reflected in gold price.
Sure. So does the interest rate situation and the quantitative easing situation, is that whole sort of convergence aggravated intensely more so than normally it would be by the brewing trade war between the United States and China?
Of course it is, and when you think about why was gold sidelined for these last many years, and it's been sidelined drastically, and it's been sidelined less drastically over different periods of time, it's because the US dollar has emerged as the de facto reserve currency of the world. And if you have a United States, which is suddenly gone into a posture, maybe not so suddenly, of increasingly alienating its trade partners, the willingness to look the other way on the ballooning deficits and the just completely improbable and mathematically implausible federal debt in the United States, underpinning that US dollar, your supposed reserve currency, your risk-free currency, the willingness to look the other way just goes down, and it goes down really fast. The other fact is you have China as your most critical trading partner, and that's the person you're alienating the most right now. So there's no question that's part of it.
Mm-hmm. And China owns, what is it, 30% of all US government debt?
Of course, and the fact that you have the Chinese owning that huge part of the debt and being a complete, a critical player in that market, and Chinese citizens and savers looking also at their holdings and their savings in renminbi and saying, what am I going to do with this? At the margin, in a gold market that's been starved, that's been in a bear market, yeah, it's had a few leaps and recoveries over the years, but it's been painful for years and years and years. At the margin, you start to introduce those new buyers back into the system, and boom, the bull is burst through the gate, and even the gold bulls amongst us have been shocked at this price action, how fast and how dramatically it's moved.
You bet. Carmen Reinhart, a rather famous PhD economist, penned a essay called Financial Repression that basically outlined how governments use this tactic of bringing interest rates to nothing to essentially take their debt and foist it onto the shoulders of the savers in society. So I'm looking at all of these factors, and I'm looking at the very finite gold market. And in the past, it's been the futures market that has allowed a much higher dollar value participation in what is not really the gold market, but is a paper version thereof.
The paper gold market, yes.
Right, and so I'm curious as to your opinion as to why now has that futures market sort of dampening effect lost its ability to dampen the effect?
That's a great question. I think a critical one that we need to be asking ourselves continuously through this process. And I think if you look at the facts, and remember I said the facts these facts have been there a year ago, 2 years ago, 2 months ago, and we didn't have the reaction in gold price. So what really has changed? Yeah, you had the change in the stance of the Fed. The reality is you have a US government that, to put it in real terms, had $8 trillion or so of debt when Obama became president, now has $22 trillion in debt. Most economists will tell you 60% debt to GDP is kind of a red zone. You're starting to get into trouble territory. 90% is a point of no return. You're around 110% in the US now. There is no conceivable way for them to get back on side. The US government, the historians will tell you, they've had a great history of inflating the debt and then contracting it. There have been periods in time, World War II, for example, the debt's blown up, and then there's been a huge peace dividend. So they've gone back to economic boom, there's been all sorts of rationalizations, productivity increases, and they've done a great job of it, and that's been the great history of the United States. But this time, we had the feed the beasts kind of a government policy of the Republican era, George W. Bush, and the debt exploded. You had wars in Iraq, you had wars in Afghanistan. And then you had a government that came into the global financial crisis, had no choice but to feed the beast even more. You had no peace dividend, you had no contraction of that debt, and it just snowballed out of control. Add to that the Social Security system. I was talking to someone earlier today, I mentioned it ran a $9 trillion mark-to-market deficit for the past year. It's now a $43 trillion deficit in the US Social Security system.
9 trillion just in 1 year.
In 1 year. And these numbers you can't wrap your head around, but again, you talk about the 22 trillion being over 100% debt to GDP. 43 trillion is 200% of your GDP. So you're already talking 300%. And those are real obligations. It's not some exotic derivative, something. That's somebody who's expecting those payments.
Watching the mailbox, waiting for it.
You know, if you grew up in Venezuela, maybe you did not expect to get your pension.
Right.
You had years and generations of being completely screwed over.
Right.
But nobody in the United States saying, oh, I have to factor in the fact that I'm not going to get it. Well, the reality is those numbers just don't add up. 300% debt to GDP, there's going to be a monetization of so-called debt jubilee. This money is somehow needs to be grossly devalued in real terms.
If it was a public company, it would be rolled back 10 for 1.
Exactly. That's a great analogy. You need to increase the denominator. So
right.
You need to keep printing money. You need to monetize this, and you need some really clever mechanism to do it because the traditional ones haven't been working.
Right.
We haven't been able to find inflation. Central bankers have pulled some levers and pushed some buttons, and it hasn't worked. So your question is a very interesting one because I wonder, has something changed now that the mechanism that has perhaps suppressed gold price for so many years has now decided maybe we need gold price to be higher? And the speed at which the gold price has moved in this run-up, okay, there's lots of positive technical factors at play and flow of funds, as I mentioned earlier, but maybe there's something else afoot here too. And I think we're not going to answer that question today, but that's a great question to keep asking ourselves as this bull market plays out. Is there something else happening here that we don't know about that's going to be an important part of that ultimate monetization or debt jubilee?
You bet. All right, Ravi, that's a great conversation. We're going to continue that as gold continues to embarrass the US dollar incrementally.
I hope so.
I'll look forward to talking to you again soon. Thanks for joining me.
See you soon, James.